Is this the year that Tesla or Rivian stock finally breaks out? That's the question that's been on a lot of investors' mind. Hi, I'm Tom, the Investing Tiger, and thanks for watching. In this episode, we are going to break down Tesla and Rivian, look at them side by side, look at how their stocks have been performing, what they really need to do to move the needle and actually justify a re-rate. And I'm going to share my thesis on how they're both unexpectedly kind of tied together and I think dependent on one another. So if you've been a shareholder in either one of these stocks for, I would say, more than 3 or so years, well, Rivian's only been public for 5 years, it's been a bumpy ride. And a lot of times you've seen ups and downs where you think this is going to be the big one. It's finally going to start taking off, and it really shows up in the chart. Let's look at the 12-month first. So over the last year, both stocks are trading up about 30%. So kind of neck and neck. Where it gets uneven is the 5-year period a little bit. So the 5-year period, when we look at the blue line here, Rivian, boy, down about 80% from its all-time high shortly after it went public. So if you were an early investor, hate to say it, you've been holding the bag at this time, but look at that long, multi-year, beautiful pacing period where it's been in the very low double digits and just perking up, showing signs of life once again. Meanwhile, Tesla, on the other hand, has been up and down. It's delivered a decent return. It just depends your entry. It's been more of a tradable stock than an investable stock the last couple of years. But I think some of that could potentially change. So I will stop sharing that and just jump into kind of how I see both stocks right now. I think it's a story of scale. Let's look at Rivian first. So Rivian is in a real interesting position. Just in the past couple of weeks, some really good news. Guidance has been raised. Production guidance has been raised to the 70,000, maybe even 75,000 unit level for this year. And that's up from the 40s not that long ago. And that really hinges upon a lot of the hope that's out there that the R2 model is going to perform and do well. And Rivian has been getting ready for this moment. They've expanded their Georgia plant to eventually handle production of up to 300,000 units per year. Scale is critical. Scale is really what's needed to make things work in the auto industry. Looking at Rivian a little bit further, let's look at like some of the partnerships that they really depend on. So Rivian is in a cash positive business. They have maybe $5 billion of cash on the books. However, their cash burn rate has been a concern with investors. We just saw the other day, it looked like the stock was about ready to punch through, traded in the low 20s. And then shortly after that, we got the news that cash was going to need to be raised. More stock was going to be issued, about $1.5 billion worth. Shouldn't come as a surprise when you look at the cash need over the next 3 years and the cash on hand. At some point, you have to have that moment of reckoning. So here in the high teens and maybe the low 20s, this was as good a place as any to do that. Rivian has some really interesting things going on. When I talk about like what could cause a re-rate and move the needle on this stock, it's two partnerships. Volkswagen, that's $1 billion partnership in itself. But I want to spend some time talking about the Uber partnership. And I think that's one that really interests me because I think there's some interplay between that and ultimately how it could impact Tesla. And I'll explain that in a couple of minutes. But the thing I find real interesting about Uber is saying we're going to commit to 10,000 cars, up to 50,000 cars, and we're going to have at least $1 billion potentially tied to this. And that potential comes down to hitting key milestones. Those milestones aren't based on hey, Rivian, can you build the cars and deliver them? They're built on the software and the technology for self-driving. Because what does Uber want to do? Uber wants to position themselves in an asset-light way where they can have full self-driving rideshare. That's what they're looking for by about 2030, 2031. So here comes Uber with the money. Here comes Rivian with the potential, the software and development, and the ability to build cars to meet Uber's needs. And what does Rivian get? They get cash that they potentially need. Well, they definitely need $1 billion or so, but they have to hit those milestones. So I already said that Rivian needs to scale on one basis, building cars and building cars profitably, uh, not building 40,000 a year and losing 20,000 on them. They just became gross margin profitable late last year. That's a big goalpost to move. The next one that's out there lurking in 2028 is, can you build them profitably? So that additional scale, building more cars, a partnership with Uber, a successful launch of R2 directionally gets them in that way. Now, I mentioned Rivian in the past, $120 stock, trading at less than $20 now. Do I see a path forward to maybe flirt with all those all-time highs again? Yeah, probably. But scale is one thing that they have to do. One scale is building cars and profitably building them. The other scale that's going to be essential is they have the opportunity and potentially the ability is the software development to actually put a product out there for Uber. If they can do it for Uber, they can do it for themselves and potentially others. Have a software out there that works, that actually you can unleash in a driverless manner and get on the streets. If they do that, if they scale, not just once, but in two areas, they have to, in two separate arenas, they have to make both those work. It's a speculative play. Um, in full transparency, I haven't bought Rivian yet. I do have exposure to Tesla, but I am bullish on Rivian. Bullish in the sense that, from a Tesla shareholder and a believer in just autonomous driving and what the future holds over the next 3, maybe 5 years, we really need Rivian to be successful at what they're doing and delivering. So let's just take a look at Tesla real quickly. I'm only going to look at Tesla as a car company. I know there's so much more, but just from an apples to apples comparison, let's keep it clean. Let's look at it on a car basis. So I talked about two things that Rivian has to do to scale. Tesla only has to scale one thing, and I'll explain what that is in a second. The one thing they're already scaling is cars. Last quarter, they delivered, they had orders of 480,000 cars worldwide for the quarter. Compare that to Rivian, we're looking maybe the 12,000 range. So there's the difference in scale already. Tesla does build the cars profitably, and their margins actually did improve to the low 20s. Now, I don't know how much FSD subscriptions are influencing that. Tesla does not break those out as that sticky revenue. We get a pretty high attach rate for people that actually buy a Tesla, opting in for the $99 a month FSD version, which I love as an investor because that is sticky recurring revenue. Tesla doesn't have to scale building cars and profitably. They got that part down. I think the one thing they have to scale, and I'm reminded of this, sometimes I'll go out and watch some video, some content on Tesla, on Cybercab and Robotaxi, and I'll listen to it and I'll look at the date stamp, and it's like 2022, 2023. And I'm like, geez, guys, it's the same story. It was the same story then as what we're having now. That Tesla's about to turn the needle. That this is going to be the year Cybercab rolls out, Robotaxi takes charge, and here we are, past the midway point of 2026. Austin has been operating for over a year now, and we still find ourselves just a slow, steady plod to getting to that point of scaling a true robotaxi business. So what I would like to see out of Tesla as a shareholder, and by the way, I am buying it in this zone, it's a speculation, I've owned Tesla for a few years, is I think we're getting closer. And where I'm keeping my ear to the ground on is not every time they plant a flag in a new city. Miami, I think it was a great, I guess you could say, pilot or launch a week or so ago. If you missed it, Miami is the 5th city that Robotaxi's operating in. They did go in straight unsupervised. I think that's pretty cool. But the common thread in all 5 cities is we're talking a dozen, maybe a couple dozen cars that are on the roads in variability. Some are driverless, some are supervised, some are in a very confined geofenced area. What I think I would really look for, and what I hope to see, is the mass rollout, not just pictures, of Cybercab sitting in a parking lot in Austin, Texas, ready to get deployed. I actually want to see them deployed, like 200, 300, 500 going into the city. And why I say that is, well, think about it from a customer experience standpoint. I've got the Taxi app on my phone, but if you cannot, with one click, know you're going to get a ride and maybe a car shows up in 7 or 8 minutes, why are you going to pick it? If you only have 10 cars in operation, there's no way to judge. There's no way to judge um, the ability to serve a customer in that standpoint. And I get it. I really appreciate Tesla is taking a much more slow and methodical standpoint, because you only get the opportunity once to delight or deliver to the customer. I'd hate to have them have 2, 3, 500 cars in a geographic area, and then there's safety concerns because all eyes are on this moment right now. So let's get it right. But I'm patient. If it's a quarter, if it's 2 quarters, 3 quarters, I'm indifferent. So I'd much rather see one market they're operating in scale like that. That would be the proof of concept for me. I'd rather see that than an announcement of 10, 20 more cities at this point. So Tesla, in my opinion, just has to scale one thing to get re-rated from a car standpoint. I won't talk about energy or Optimus in this point. Again, just talking about the car piece. All right, so how do these two stories, I think, intersect and connect? And I think that's the thing, that's the edge you might want to be looking at longer term as an investor. I'm thinking end of this decade, early 2031. So let's step back. What did we learn about Rivian? They have a partnership they just necessarily need with Uber right at this moment. And Uber needs Rivian quite well to be successful. But the biggest hurdle, I think, is not only going to be the software development, building of the cars and deploying them and unleashing them. The big thing is going to be the regulatory approach, and it's an uneven regulatory environment in the US. No two states or cities are equal. Some are slow movers, some are fast adopters, and then you'll have the mass cities in the middle. Who has the best, in my opinion, experience navigating regulation, legislation, city by city, state by state, from a labor standpoint, safety standpoint, congestion standpoint, tax standpoint? Well, you name all the roadblocks that get thrown up. Well, one name comes to mind, and that is Uber. They have done that since they first disrupted rideshare well over a decade ago. So I think as this plays out, what I would love to see, the way I'd love to see the dominoes fall, is Tesla is ready to go. Tesla starts scaling. We know they can build the cars and deploy them. Tesla deploys to a few more cities and starts going deeper in a couple of cities. They actually show proof of concept. They can deliver the consumer need. But simultaneously, what I'd love to see happen is Rivian meet their milestones, satisfy Uber. Uber says, yep, we'll give you more money. You built us 10,000 cars. Now let's go for 50,000 cars. The flywheel improves and continues. At that point, now we have two fighters in the ring. We have Tesla and Rivian delivering full self-driving. If you think about it and play it out, Uber's got to be pretty confident in Tesla's, or rather Rivian's, development of the technology to put more money out there, confident enough that it works. And if it works and it's safe, they could actually go to bat for it. So I'll just tie it up and say this. I think it's a big ecosystem, not so much from who's going to make the most money, to actually move the needle. And that's where the real money is going to be made. When we start thinking of use cases, one little use case for autonomous driving is just from a rideshare standpoint. But you start thinking about the number of use cases that you could have out there where an autonomous vehicle can solve for, and the money that's attached to it, that's where the real long-term money comes into, definitely for Tesla. And I suspect Rivian would have some benefit from that. So I'll tie it up. Uber needs Rivian, Rivian needs Uber, Tesla needs them all. Rivian actually needs Tesla too, because they continue to flood the market with more cars and make sure there's a developed market. They're just basically applying every other concept that works in technology. When you just have one when you only have one Titan out there, you generally don't have a strong, a stable, or a sustaining market. So those are my thoughts on it. It'll be interesting. Let's play this one back a year from now and see how it holds up. But that's kind of what I'm looking for. I hope you enjoyed this video. If you like this content, please hit subscribe and hit the like button.